This is the market strategy session for the week of May 4th, 2015. I am glad that you could be here today, joining me today. Have a small turnout, but again, pretty good registrations. Just people, I guess, forget to come early today. Anyway, let's go over anything important this week earnings-wise. Now, I haven't even looked at this yet. I really doubt anything is going to stick out like, oh boy, we got to watch out for this. It's probably not going to happen. I don't think that we're going to have anything that's going to be, hey, watch this, it's reporting this week. So we'll go through it quick, but you can't really go through it quick. But while I'm doing this, did anybody see the Mayweather-Pacquiao fight last night? I did. And I want my money back, although I didn't really pay for it. My friend took me out, but it was really not good. Really not good. I don't know what the heck Pacquiao was talking about. I don't know. He did not look like a man possessed to beat Mayweather, that's for sure. He certainly did not look like that kind of a fighter last night. Paul, did you see the fight last night? Paul? He's not answering me. Paul? I don't know if he could hear me. Oh, we can hear him. Paul! Hey! All right, I don't see anything. I mean, I'm going through these as I'm talking. I don't see anything that's going to stick out and go, hey, this is... And the fight kind of screwed me up last night because I got home so freaking late. I didn't get up early. Usually I'm up early Sundays going through everything. Otherwise, I would have picked out something, but I don't really see anything. So let's go to Forex Factory. Mayweather won. So let's go out to Forex Factory and look. You got Monday, factory orders and Evans speaking. Tuesday, you got the Spanish unemployment change, but that's at 3 in the morning. You do have trade balance and ISM non-manufacturing. So that's two reds on Tuesday in the States. One is pre-market, one is during the market. All right. On Wednesday, you got ADP non-farm employment, and at 9:15, Yellen is speaking right before the market. So this can absolutely move us, all right, depending on what she says. You got crude oil at 10:30, and Lockhart speaks at 1:30, unemployment claims, weekly unemployment claims, and then you got your job numbers. So there's a lot of red this week. Friday, Thursday, Wednesday, Tuesday. All right, here's, by the way, Paul is calling me, by the way, right now. Watch, my phone's going to ring in about 2 seconds right now. That's Paul calling me, telling me, dude, I can't hear you. Watch. You want to bet? Let's hear. See. I just heard him dialing. Let's see. Dum, da, dum, dum. But he's on, so we'll definitely hear from Paul. But
please enter your audio PIN.
no, he's coming on through. He's coming on through the phone.
If you do not have a PIN, just press pound or hash.
Sorry, guys. We'll get it going. Luckily, it's the morning, so nobody has to run out of here so fast. But anyway, we have a lot of... Whoa.
That's your show, me.
Yo. You're trying to go through the phone, right?
Yeah, is it screwing everything up?
Yeah, we can hear you beautifully without being on the phone, but you obviously can't hear us. Are you sure your speakers aren't muted on your laptop?
Yeah, because I have my Apple. So here's what I'm going to do. I'm going to hang up, and then you text me when you're done.
No, just go. I'm going to give you...
Wait, hold on.
What?
How's that? Is that any better?
Yeah, much better. But I'm going to give you... I'll give you the controls right now. First of all, I don't have to text you. You'll see the controls come over to your side. You'll know I'm done. But I'm done. I can give them to you right now.
So he just work. Can everybody hear me okay?
You can, but you sounded better through the computer.
Oh, okay. All right, so I'll go back to the computer.
Yeah, go back to the computer. No, he'll be coming. He'll be coming soon.
All right, so I'll go back to the computer. I won't be able to hear you.
No, you will not be able to hear me.
So if you want to make a comment, either text me or ping me on.
No, I won't make a comment, and I'll know when you're done because you'll say, all right, I'm done, because I'll still be able to hear you.
Okay.
All right?
Later.
All right. Sorry about this, guys, but we'll be okay. We'll be going.
Okay, good Sunday morning. Gotta plug my computer in. Good Sunday morning, everybody. Thanks for accommodating. I'm in California, and I'm running a golf tournament this afternoon and this evening, so that's why I'm not around. Let me just do a couple of things to set up, and we shall be good to go. Okay, let's see. Questions. I can't see the questions. Tiny, I cannot see the questions. I don't have the question window. I don't think. Let me just, nope, I do not. So Tiny, see if you can. All right. Wait one sec. Okay. Now I can see the questions. Excuse me. Ink has got water. And we're good to go. So welcome everyone to Sunday morning. Let's rock and roll. Margaret had an interesting week. And we tested the lower end of the range, and we got rejection by bulls said, we're not ready to give up yet. So Friday was an interesting day. We'll start right there. So the indices were, for the most part, they average about 1%. You'll see. What was most telling to me about Friday was this. You only had essentially 600 more up than down on the NYSE with a tape that was 100 bips. So that was, if you want to poke holes on Friday, that was really disappointing. You did not have broad participation. You had essentially the indices on a cap-weighted basis, meaning skewed towards the large cap, towards the big companies, lead the way, and the smaller constituents were not leading the way. That's not the healthiest balance, but I don't want to read too much into it. It was only one day. So let's dive in and see where we are. Okay, let's start with the Dow. One thing, as you know, I hate these tall red candles. So down here you had a little bit of a shadow, and then we bounced. And here you have the same kind of bottom. I just don't like bottoms that come like this. These taller red candle bottoms. Never have, never will. They definitely fool me sometimes, but I just don't like them. So can the Dow rally a couple more days towards the upper end of the range? Sure. Are we in that spot where we're breaking out to 20,000 yet? I don't think so. I still don't think. I think you need to shake the trees a little bit, get some more sellers involved, make the market look a little weaker. I just think we're stuck in this range, and we're going to bounce around until maybe we poke below the bottom, and then people get really bearish, and then we take off to the upside. But we'll see. I'm just not ready. As you know, I'm still long-term bullish. I'm intermediate-term bullish. If you read my blog for the last couple of weeks, month, I'm short-term. It's murky. I don't think it's anything to write home about. IVV, which is the S&P 500, kind of sort of the same thing. I mean, could we poke to an all-time high again? Yes. Will it be a buying opportunity? My gut says no, but we'll take it when we get there. I mean, I'd like to, even if we went sideways and we drew stochastics all the way down. Let's see if I can draw. So let's say we kind of like this. If we did something like that, you'd get stochastics all the way down here. People would get really bearish that this. People say, "Oh my gosh, you got a head and shoulders, or you got a triple top, or some kind of nonsense." And then I think you could support the boom move. But we'll see when we get there. It's a far. We got a ways to go. Okay. Mid caps, same thing. I mean, can we poke back to new highs? Yeah. Do I think we take off? At this point, I don't. There's the Russell chart. A little bit weaker, but certainly stronger than the Dow, and I think the S&P. Could we get the Russell back up to the highs? Yes. I just don't like this kind of candle. Thursday's candle was not the death knell, but certainly negative enough. And Friday was an unconvincing rally. It was an inside day. S&P again, not the inside day. Mid caps inside day. Dow, kind of sort of inside day here. So Friday's action was nothing to write home about on the charts. Here are the Qs. The Qs and the mid caps. Qs still look fine. They didn't do anything deadly that's going to really impact my long-term decisions. I've got sufficient. I wish I could remember what I got on the index. I know I no longer own the S&P. I got out of that right at the highs smartly. I own the mid caps. I own a little bit of small caps. So I got a bunch in the MDY and a bunch in the Qs. Okay, let's go to Europe. Europe, which I've been bullish on all year on a relative basis, continues to behave really well. I mean, you get higher highs, you have higher lows. Still looks pretty good, right? Even the selling days, you're not seeing awful red candles. And Europe still looks pretty good to me. You can buy Europe in any pullback. In emerging markets, you already know my scenario there. Been bullish on that for a long time, and I remain bullish. I like the pullbacks. I think you buy the pullbacks in emerging markets, and they're leaders. FXY, I remain long, happily long. You can't complain there. Philippines, Thursday was really an awful day. And if it does not immediately recover, I will call this a day of recognition, meaning the top may be in the Philippines, in which case I will sell that and go to Hong Kong, EWH. But international looks fine. Why is that? Well, part of it is the perceived or the real dollar weakness. When you have debt that's denominated in dollars, a strong dollar really hurts your economy. When you have debt that's not denominated in dollars, a strong dollar is almost irrelevant. So this week, this trading range to short-term weakness in the dollar certainly is a tailwind for emerging markets, especially those countries who borrowed money in U.S. debt. So let me pause and look if you have any questions. We have a small group today. Why do you look at IVV and not the S&P? Oh, I look at IVV. I stopped using the SPY because of this fat finger. This was a real trade, but it was someone's fat finger that caused it. So it kind of screws up stochastics and the chart. IVV, the exact same thing, doesn't have that print. That's why I look at IVV. Why has the German Bund been so volatile lately? I think, well, first of all, I think it's because of QE being in early midstream, and I think a lot of it has to do with our treasuries being so crazily volatile lately. But I don't think it's anything on a long-term fundamental front that is causing volatility in the treasury bond markets. Let's go on to the three key sectors. Look at banks first. I said this for a couple of weeks, and I struggle with the banks. They've frustrated me for a while. But the banks continue to be neutral with a positive bias. They look absolutely fine. Are they great? No. Are they bad? No. But if you're longer term bullish, you could certainly make the case. Let's go to a weekly chart. You can certainly make the case that this consolidation rounds off, and eventually, maybe next quarter, maybe late this quarter, the banks take off to the upside and reemerge as market leaders, which would be hugely bullish for the U.S. market. So definitely keep an eye on the banks on your watch lists. Because if they take off to the upside, it's going to be very good for U.S. stocks. The transports, so they struggled all year in this Mets and Mets trading range. They broke below it. We talked about this where I said, boy, what a bear trap this was. They had a rally. They're putting in a secondary low. Look at Friday's action in the trannies. Okay, you have a secondary low forming. You've got a bullish engulfing pattern. The trannies are supposed to, maybe not Monday, but they're supposed to get a bid and take out this high. Okay, obviously, if this low gets taken out on a close, you get out and you're wrong. If not, ride the tailwind to wherever it's going. And finally, the stocks, the semis, are neutral. I mean, they're neutral. I'll say neutral with a positive bias, but they're not leaders right now. I do expect this whole consolidation to lead to a breakout to the upside. But I think the semis are just resting and digesting, and maybe the next leg higher in the bull market, we get an old-fashioned rally led by semis and banks. We haven't had that in an awfully long time. Other sectors, a little quicker. Software, I said, has been the leader. They look fine. I don't trade this per se, but Microsoft looks okay, and certainly the software looks fine. If you're looking for a bullish ETF on an up day, software is it. One of my sector picks of the year has been telecom. It's been okay. It hasn't been awful. Hasn't been great yet. I do think it gets a bid later this year. And even telecom, Thursday was an awful day. Friday, you put in a doji, took out the load, which I like. So telecom, to me, is worth a shot to the upside here. Look at AT&T. There's only two stocks that really matter, AT&T and Verizon. Nothing to speak of. Diversified financials. Boy, look at this. What would Tiny say? This is absolutely wound up and ready to go. Which way is it going to go? We don't know yet. My sense is the sooner it goes, the more bearish it would be short term. The longer this lasts going sideways, the more likely it is that the resolution is up here. The consumer, which I've talked about for months and months that I like, hard to argue with this chart. I don't care what you think of the consumer, what you hear on CNBC or Fox Business. I don't care that GDP printed at essentially zero. This one chart probably matters more than anything else you could possibly watch on TV. You could ignore all the, to me, the negative pundits, because if our economy was that bad, consumer discretionary would not be a whisker from all-time highs. Sorry. So I would say that, as usual, the news background is confounding you or whomever is analyzing this as being negative. This is not a negative chart. Retailers, a subset of consumer discretionary, definitely weaker, but not awful. Right into the zone of support. Looks okay, not great. I like discretionary better, but Friday's action got you all of Thursday back and then some. And home builders, another one of my sector picks for the year. Friday's action gives you a bullish engulfing pattern, which I like because it came below this low. So this low stops out some people. Not a surge, but it's definitely stopped out people who are looking at this low. And now you got a reversal right on Friday to reverse all of Thursday's loss. So another chart that I do like, and sector that I like fundamentally. XLI, industrials. I said the same thing. That I have the pair of twos. There's nothing great, nothing bad. I don't really have an opinion. Material stocks I've not liked all year. Friday's action was really good in that we took out the whole last week's high. That was a really bullish day on Friday for material stocks. They're just not on my list for the year. This late in a recovery, this late in the bull market, they typically don't lead, which is why I'm not going to play against them. Okay. Energy, which you know I've been bullish on for a long time. We're getting there. I've said this for a whole year. This is what I'm looking for. A close of this gap. And we are getting very close on XLE. OIH, which I remain long all year, quite happily now, did not feel so good the first couple of weeks of January, if you remember. I really hated it here, but I stuck with it. All year long, I've stuck with it. It's been a really good position. And again, in XL and OIH, I'm looking for now that the 200-day moving average is also right near where the gap closes. So maybe, hopefully, I use more hopefully, I'm confident, or I'm anticipating a run up to close the gap and the 200, where I will probably take half my position off right here. This is the epitome of patience bearing out so far. So, and let's finish up with, let's see, healthcare, which is I think my biggest sector position, has done nothing for the most part since the year began. We're pulling back. It looks okay. You know, we're at a very strong period of equilibrium. Maybe we continue to move out and then have another run to the upside, but it's not a world beater right now. Biotech's my other large position. Does not look as good as healthcare, and I don't like this action. I'm still long it because it's on my hit parade based on a quantitative model, but I do not like this action. Why? Because you've got a phenomenal reversal at the highs, sell-off. You've got another reversal here below the highs, and now you're threatening to roll over again. So this action does not conjure up images of confidence in the biotechs. I am long them. but we'll have to rethink in another week or two. Defensive side, let's do some REITs. We talked about it for a while. They just look crummy. They continue to make lower highs, lower lows. No reason to get excited about REITs. Staples, nothing. We are perfectly going sideways since early December, and I have no reason to get excited about consumer staples right now. If the economy really was as weak as the GDP print was last week, staples should be at all-time highs because they're a defensive group. So I said this last week. I believe the first quarter weakness, which you've seen for like the last 4 years, is some kind of anomaly, and we're going to have much better GDP in the second and third quarter. Now, if second and third quarter economic growth is not good, I will say I'm wrong. Got to rethink it. What the heck's going on? But a chart like this does not tell you that we've got horrible economic growth. We should be much higher on consumer staples if GDP was that bad. And finally, XLU utilities look downright awful. They have for some time. Again, you would think if the economy was really bad, utilities would be rallying because rates would not be going up anytime soon. So this does not speak to a tremendously weak economy. Let me pause, answer your questions, and then we'll go from there. Why do you think, what do you think of the seasonal trades in Hirsch best 6 months system, or you prefer the MACD system, or just follow the charts? So the sell in May and go away. I have a blog that I just started to write about it yet on the plane. So let me say this. I have not done the research that I wanted to do on sell in May and go away. I've been trying to find a research to do some Excel work for me, and I haven't been able to find one. But given that, here's my opinion. Sell in May and go away works historically. You cannot argue it. Okay? On the surface, it works perfectly. But I believe there are ways you can fine-tune sell in May and go away. For instance, when the May 1st period of negativity begins, if the S&P 500 is above a rising 200-day moving average, just when I eyeballed my research, it said sell in May and go away didn't work. So when the market was in a good spot based on this long-term trend, sell in May and go away didn't work. Additionally, if you look at the trend, just the price trend of the market, you just looked at is the market making higher highs and higher lows when sell in May and go away begins? It has a more muted effect. If you look at the presidential cycle, because now this is the third year of, or it's a third or a seventh year, depending on how you look at it. The third and seventh year are typically not that awful in sell in May and go away. So I think on the surface it works, but if you put a little more work behind it, you'll find out you can do a lot better job. So I'm not terrified about the calendar turning. Mushroom, historically entering a 6-month period during which the market is not that bullish. Do you think iron condor is a superior approach? So Mushroom, I'm not an iron condor kind of guy. Tiny can speak more about the options. If I do play options, I'll just play some spreads. But I only play spreads when the VIX is really high, and the VIX is clearly not high right now. So I'd rather just kind of continue as I'm continuing. Dean, why is telecom a pick of the year? I picked telecom because it has not had its day in the sun during the whole bull market. That's number one. Number two, when we began the year, it was one of the most negatively rated sectors by the pundits, and they're almost always wrong. And number three, I didn't think that the Fed was going to raise rates this year, which I've been right about, and I figured that some yield plays would continue to get a bid. which clearly I've been wrong on basis of utilities. Let's see. Paul, just to be clear, I know that you are still bullish, but don't you think that earnings are very bad and reason that we even rally well expectations, situations don't make you worry in a long term? Ricardo, so let me say this without dismissing your question. Here's a chart of the S&P 500. It's the first quarter where earnings year over year are down since 2009, right? If I just told you that in a nutshell, not in a nutshell, in a vacuum, you would say, geez, earnings are down year over year? That's awful. Market's got to be in bad shape, yet we're only one day rally from all-time highs. So one of the best things I ever was taught in investing and trading is it's not what the news is, it's how the market reacts. It's not what the news is, it's how the market reacts. The news is crummy on earnings, but everyone knew about the bad earnings 4 months ago. This is not new news. And I would say the reason why in 2015 we're essentially going sideways is to catch up. The market's taking a pause, digesting, let everything play out, and then earnings have been poor, as you mentioned, and then I think earnings get a lot better and the market takes off to the upside. But I don't think this earnings thing is a new story. I think it's just being reported now, but it's nothing new. I'll get to the yen. Scott, IBB. No. 50-day, there'd be resistance, which is right above it. The 50 is the blue line. The yellow line you're looking at is the 89-day exponential. That's one of Tiny's moving average I just copied. He likes it because 89 is a Fibonacci number. All right, let's go on. Wait, Paul, my cursor is not calibrated to the charts. I'm in the middle. Ron, I don't follow. Only I wonder is I'm in a hotel. I wonder if my internet connection is not wonderful, so which is why maybe there's a little slowness or latency when I move around. So my apologies. Gavin, I'm going to cover TLT in 1 second. I'm going to cover TLT and the yen and gold for you guys who asked, I promise. All right, let's move on. I'm going to explode. I just ate. I'm at the Marriott in Newport Beach, and they have the most amazing breakfast buffet. I had 2 egg white, tomato, mushroom, onion omelets with spinach. And then I had 2 plates of fruit, and then I had a vegetable juice and 3. They have a juice machine so I juiced 1 veggie and 3 fruit juices, and then I had something else. And then for dessert, I had some cheese and fruit. So I feel like I'm going to explode sitting here. Okay. All right, let's go on and go to bonds and the dollar and et cetera. So here's TLT, which unfortunately I remain long and wrong. The chart looks broken on TLT, but keep in mind that this chart does not include dividends. So if you looked at it in stock charts, which does include dividends, it still is pretty crummy. Okay, so TLT still looks pretty crummy. I'm going to get out. Unless it rallies this week, I'm out. Because it was part of my global macro model. And its signal in the model is going to fall off now for a while. Unless we immediately turn tail and rally back to probably 128. But it does not look good. The bond market does not look good on a yield basis. Here's the 10-year. Looks like we're headed back to test this high. Remember, my range for the whole year is 230 on the upside and 150 on the downside. It looks like we're headed towards the 230 level on yields, which means rates, long-term rates would go up a drop, and bond prices would go down. So think about this, Ricardo. I think it was Ricardo. You asked about the bad earnings. So the economy just printed essentially a flat GDP, no growth. Earnings stink. So if earnings stink and the economy ain't good, why wouldn't bonds be rallying? Why are bonds selling off? We have no inflation. So the news and the action in the bond market don't equal each other. Always go by what the security is doing, not by what the news is. Okay? This is telling you that the market totally dismisses the bad GDP report and is saying next quarter GDP is going to be really strong. The dollar has come off. You're getting pretty oversold on the dollar on stochastics. First time in ages. You're back to some pretty good support in the dollar. I do not think this was the peak in the dollar. I would say that we're going to go significantly higher. It just may take some time. But I'm certainly a buyer of dollars in a weakness. The euro had a really nice rally. I think you're kind of at the point where if you want to be long-term, which I am negative on the euro, I think you can get short the euro again. That's a pretty good rally, right back into resistance. So I would not be buying the euro anytime soon. Yen has gone nowhere for 6 months, essentially. I still think I'm not going to play it to the long side if I can help it. I think all this is one giant digestion that's going to lead to sharply lower prices. So yen is just starting to roll over again to the lower end of the range. I would, if anything, I'd be on the short side, would not be on the long side. And our other currency, which is gold. Gold still does not interest me on the long side. I think it trades like poop. So eventually I do believe we're going to go below this low this summer. Is it now? I don't know. I'm not playing it. Gold does not look so hot to me. I think the Europeans are going to have to print probably double the amount of money they're printing right now to get the gold bull market really going again. And then you need the Japanese to step up again. So gold is a play for the tomorrow, not for a play for today. Silver, the same thing. I don't like silver either. I think silver goes sub 14 later this year. Let's see, gold, silver, copper. Copper had a really interesting week. Okay. So copper, last couple of days were monsters in copper. Talked about copper since this point, since this reversal. I liked it all the way up into here. These 2 days got me negative on copper. I didn't give a lot of credibility to these two lows here. Clearly I was wrong because they were of more significance than I thought they were going to be. And now copper is broken out to the upside. I mean, I think you got to wait and see where it goes. Copper does look pretty strong. So maybe we get a run, in a couple-day run, we pull back to the breakout point and consolidate. But copper definitely, the last 2 days were really bullish for copper. Energy. Natty gas is finally getting off the mat. The commercials, the smart money has been locked and loaded long for months and months and months and months and months and months and months. And they're finally getting their R's together and going. I do not love the way this low is formed, but I can just tell you this is pretty bullish action for the last 5 days. Crude oil, you already know my opinion on energy. I think it's going higher, 65-ish. I wonder who was arguing with me, not to be a jerk, but when I was calling for the bottom in crude in here, I forgot who argued with me. I don't remember which one it was, that we were going down to 30. And I said, could be, I just don't think so. I've quoted this stat many times that when crude collapses by 50%, the following calendar year always sees a 50% rally, always. So we know crude, the low was, well, let's just call it 42. So crude bombed at 42, a 50% rally from 42 would be 63, and we're at 59 right now. I think that's, I'll pat myself, we're not there yet, but if we do, that's a pretty good move. I am long crude as well, so it still looks okay. Overbought. People are now, the thing about crude now is nobody wanted to touch it forever, and just in the last couple of weeks, people are starting to get excited about crude again, which means the rally is probably in its third or final quarter of the rally, if it was a football game. All right. Let's see, we did gold. Oh, we didn't do GDX. That's what I forgot to do. Sorry, guys. So here's the GDX. It clearly looks better than the metal, but there's nothing to write home about. There's the GDX. I don't know. Pair of twos. Nothing exciting to me anyway. Okay, let's go on. I think the last thing to cover is commodities. So wheat, fundamentally, you've got the most negative sentiment on wheat you've seen. I don't know if it's either all-time or the top three. Wheat is definitely a buy here. You've got a nice little reversal here. So you're in that spot where you can buy wheat. And your stop is on a close below this candle right here. But wheat is definitely a buy. Corn getting closer, but still has not wanted to hammer out a bottom. We've got to look for one. So I look for a bottom in corn this week. And you can play corn for a trade. And beans, nothing. So my order of grains would be wheat 1, corn 2, beans 3. And the tropicals, here's sugar. I have no opinion here at all. You can ask Tiny if he does. I just don't. Pair of twos, dead. Cotton, until Friday it looked pretty good, and now we have got a bearish engulfing. Let's go back a little further. In the context of this, you've got a huge rounded bottom forming here. Intermediate term, I think cotton looks good. I don't like it in the really short term, but if you get a pullback, I'd be interested in playing cotton again. Cocoa, I don't have an opinion. Friday's action was really nasty, so I think I probably should let it shake out. And finally, Starbucks, coffee, looks like it wants to come down and maybe put in a bottom right around the old lows from February and March. Okay. Any questions, comments on anything? So stocks have pulled back. They're bouncing around. I think we're going to stay kind of short-term volatile. I haven't asked about RSX. You know, I've said this since you guys started asking early the year. I think with Russia, this is the day we should have bought Russia, if you're going to look at Russia. Once it got going, I had a tough time getting on board because the downside was so great and the volatility was so high. And then I think on the upside, where are you going to go? And here, the rally's kind of gotten into the zone of resistance. There's no exact line or point It's a zone, and I think you're in that zone of resistance right now. So there's nothing. I don't really have an opinion on Russia. Maybe it goes a little higher, closes the gap, and then has a pullback. What do you think of TBT? I mean, TBT, Tracy, is just the opposite of TLT. There's TLT, and TBT is the opposite. I think it looks okay here. Maybe you buy a pullback if one comes, but I think it looks okay. Your pointer is totally screwed. Okay. Scott, what do you want me to give dates on? Which ETF do we have up there that my pointer was screwed up? It's got to be the RSX. Okay. Yeah, it must be the internet connection. Okay. So what I'm talking about is the $20 level, which is the old lows from mid-November. That's your target of the rally, and it's kind of got there already. 20, maybe goes to $21. All the way on the right side of the chart, the April action looks like it wants to go a little bit higher, close the gap from early April, and then maybe close the gap from late November, and then I think the rally's done in Russia. Hope that helps. Let's see. What am I doing in Newport? I have 2 meetings and a conference, so it's a schlep to go from Connecticut to California. So I try to pack in literally as much as I can over when I'm here. So I am doing all I can to, because I don't want to come back to the West Coast till 2016 if I don't have to. Let's see, Greek and NBG. Greek. I don't have a strong feel here. Recent action from March to today looks constructive, but you've also rallied 25% in 2 weeks. So maybe if you're looking to get long Greece, I'd probably wait for a little short-term pullback, and then maybe get a better rally towards the 14 level. NBG, I don't know NBG. Oh, National Bank of Greece, I have absolutely no opinion. Maybe Tiny does, but I definitely don't. It's a penny stock. Your guess is as good as mine on that disaster over there. Let's see, RSX. What do you think about home builders? Yeah, Fred, I covered them before. I like them. They're one of my picks of the year, all the way on the right side of the chart. Friday's candle was a bullish engulfing. We had a nice pullback since early April. Nice pullback. And now it looks like they're trying to bottom again. So I like the home builders. No, Ron, no celebrity pros in my golf tournament. My golf tournament's a bunch of investment advisors like myself, and most of the group is golf challenged. There's a few of us who play golf seriously. The rest of the group is very challenged. So it's a long round. So it's co-ed. It's a long round. We do lunch, golf. We have open bar on the course. We have open bar when you get in. We have hors d'oeuvres, dinner, dessert. It's a fun, and everybody wins a prize between, what, $40 and $150 in Pro Shop credits. So it's a fun day. I just wish it was a little warmer here. I think it's warmer in Connecticut than it is in California. Other questions, comments, concerns, disagreements? I love the disagreements. It must be Sunday morning. Everyone's really respectful and quiet. Anything else? Going once. Going twice. Okay. So, Tiny, you're on. Well, I can't hear you. God willing, I will be back with you guys next Sunday night at our regularly scheduled bat time. Thanks for coming on your Sunday morning and sharing it with Tiny and me. Have a great week. Go ahead, buddy.
Thanks, Paul, for stopping by. Does anybody have stocks they'd like me to look at? Please throw them in, and I will go over them. Got a real small turnout today, only 30 people, but we got 100 signed up, which is kind of strange. Very weird. Hopefully the recording will work this time around. Last week it did not. People are going to be pretty pissed if it doesn't work this time because we changed the time and all that. And I would be mad too. I understand. Got a couple of questions I want to address real quick about this email I sent out. I sent out an email yesterday, and there'll be another one tonight about this e-commerce business that I have just started. Well, we started a couple months ago, actually. We're selling physical products on Amazon. Just real quick, if you're not interested in the market, then don't read the emails or don't listen to me now. I'm only going to talk about it for the next 30 seconds. Then I'm going to get into the stocks when you guys are listing them. But it's just a business opportunity from 4 guys who do total kick butt stuff with selling physical products on Amazon. It's a great way to diversify. It's a great way to own your own business without having to hold all the inventory, get a warehouse. You don't have to make anything. You outsource stuff from, you can outsource stuff from China, from India, from the United States, from Indonesia, all over the place. And that's it. So, I mean, really, I don't really have much more to say about it, except it's an opportunity that I'm pursuing. There was a course, very popular course, that they sold thousands of that went for $5,000, a lot of money. My partner bought it when it was $3,500, and it's a great course. I'm not knocking it. Now it's $5,000, but this course that I sent out the email on is only $1,000, and that means you save $4,000 you could buy with inventory. So if you're interested, look it up. If you're not, I'm sorry to bother everybody, but you'd be surprised how many emails I get, and I don't have a huge list. But I get a lot of emails from people asking me about, other things, especially when I talk about that I'm doing other things. They're always interested in knowing, what else I'm doing, which is funny, So that's one of the things I'm doing. I also do marketing and advertising for local businesses, and I'm actually partners with 2 guys. And one of them is a doctor, and we do some medical stuff. I obviously don't give the medical advice. I'm pretty bad with that. But I do the marketing and the stuff around that, but otherwise. So Mushroom, that's a good question, which is the opportunity is interesting, but if you were able to find a product, how does one know if it will sell or not? Well, they teach you that in the course. So you'll get an email today, Mushroom, you'll look for it, where it's an 1-40-minute video of this guy talking all about it. It's free. It's a great video. I mean, you got to commit the time to watch it, but when you watch it, he talks. It's a recording of him at a seminar, and he talks all about that. So, you have to look up. You have to look to see how many searches something is getting in Amazon, if people are interested in buying it, if they're popular, and then there's always risk involved, but the good news is that depending on your price point, your risk could be a few $100s. Your risk doesn't have to be, I'm putting $10,000 of inventory up. But, you could eventually you want to be buying $50,000 worth of inventory, right? Because if you're selling $150,000 a month, you want to, that's a pretty good deal. But to start, some people are starting out with like $100 in inventory investment. So it's, but you'll see a video today. It'll come today, and he talks about how to find the stuff. I mean, I will tell you that is one of the hardest things. But if it was easy, there would be no market for it. You got to put some work and effort into it. It's like the market, right? It's like the stock market. Everybody thinks it's red light, green light, and it's that easy. Well, yeah, I wish it was, but I've been looking for the Holy Grail for 20 years. It just doesn't exist. If you're not going to do the work, if you're not going to use stop losses, if you're not going to wait for entries, then, you're never going to make it, and it's funny because I have I'm talking to Mike Swanson, who a lot of you guys know, a lot of you guys and gals know. I'm talking to him at 12:30, 12:30, and we're talking about, he did a recent survey to his list, and it's pretty amazing, the changes that we're seeing over the years. People are leaving the I want to learn stuff behind. They don't want to learn anymore. They just want, what's going higher, what's going lower, how am I going to, make $5 into $50,000 tomorrow, and it's, unfortunately, I mean, you guys know because you're here, right? It's only 30 people here, and you 30 know at least that that it's a lot more than just throwing darts at and even the other 70 will probably going to watch, and we usually get like over 200 people watch the review actually, but so whoever watches the recording of this, at least you're putting some effort in, right? Sitting here listening to Paul every week, listening to me every week, but you'd be surprised how many people just don't even want to do that little, and they still buy the penny stock game, even though 99.9% of those stocks never go anywhere. It's a good game to play with, well, this started out as a penny stock and this one started out as a penny stock. Okay, but those are the aberrations. There are thousands of stocks that crash and burn and just loot people's money every single year, but people still constantly throw money at these penny stocks. It's just whatever. I mean, it's, what are you going to do? All right, anyway, I'm going. Enough of my rant. I'm going now. So let's start right off the bat. WFC, I like it. It's in a consolidation up here. It's holding up okay. Got to wait for confirmation here, but it doesn't look too bad. AIG, looks like it wants to go back to the highs. Looks okay. Facebook, watch the 200-day. Now, this hasn't been below the 200-day since 2013, and it was only there for a little bit. All right, so I want to see what they do at the 200-day if they come in and they buy this. Facebook has been holding up very, very well. All right, that doesn't mean that the 200 is going to hold. But, this little lower high, I'm not really a big fan of here, but it's holding up pretty well. It's been holding up pretty well. So, anyway, let's keep going. GDX, what is that, the gold miners? Yeah, let me watch the 200-day, see if that comes in as resistance. It looks okay on the short term, sorry, but you really got to wait for that 200 to clear to really get bullish on it. But short term, yeah, it looks like it may have a buck in it till it smacks into that 200-day. JO looks lower. This looks like it wants to break down lower. McDonald's, more bad news for McDonald's, but again, another stock that holds up very well. I am not, I'm pretty big on this stock because of the way it's acting. I have no fundamental-wise and all this. Don't ask me that stuff. I don't care about it. Not that you are asking me, but don't ask me, well, why do you like them so much? And the only stock I really like for the story and everything is Disney. Otherwise, I could care less. And my kids own Disney, full disclosure, but Disney is the only stock that I like the story of. Everything else I could give two craps about. I am only a technical guy everywhere else. But, I mean, McDonald's looks like it's holding up well here. Of course, it could flop on its butt right now, and if it does, you really shouldn't be losing money because it looks good, but it hasn't broken out yet. So again, wait for confirmation. I know nobody wants to wait. They just, well, what do I buy right now? What do I buy right now? That is not how it happens. That's not how it happens. Sometimes you got to wait around. Okay, SWKS looks good. Looks like it wants to go back up to the highs. I like this little shake and bake around the 50-day. Now it looks like it wants to go higher. Newmont Mining also looks pretty good. Got to take out this small double top. And then you got this resistance up here at 2740 that it has to get through. Okay, Netflix. Yeah, still looks okay. I mean, it a possible flag failure here, but there's nothing confirming that flag failure yet, right? If it's holding this low here at 552.69, as long as it's holding that, they call it 552. Because the pennies don't really matter, right? So just use dollars on a $550 stock. So use 552. I mean, if that gives way, yeah, then maybe we could get a retracement back to the low end of here and maybe even entering the gap. But right now, even though it doesn't look as sweet as it did last week, it's still in a bull flag. Okay, Whirlpool. Yeah, I like the way that it came right back over the 200-day moving average, but I want to see confirmation on that. Low, LOW, that's Lowe's company. Big day on Friday. Got to get through those short-term moving averages, though, on the short term, obviously. Also, big day for Home Depot. Watch the short-term moving averages again. So these stocks look okay. They don't look terrible, but they need work still. They still have to get through the short-term moving averages. SGG, interesting stock here. I mean, you're in a coil, right? You're in a triangle, a coil, whatever you want to call it, right here. So, yeah, you got to wait for confirmation, but it doesn't look bad. It doesn't look bad here. KR, yeah, I mean, it broke, it filled the gap, it bounced, it broke down below it, it got back above it. It's probably going to need a little bit more of tipping its hand before I could get a firm opinion on this. It doesn't look terrible, but it's not really crystal clear either. Starbucks, pull back from highs. Looks like it's a buying opportunity here. ISRG, holding the 200-day. You know, I love setups like this because you know where you're wrong right away. So you draw your lines in, whatever you do. You want to do this or whatever you want to do. And you wait for it to tip its hand one way or the other. But more importantly than tipping its hand, you want to wait for that to stick. So if it breaks one way or the other, either down or up, you want to make sure it is staying there. You don't want to just sit there, watch. I need a glass of water. I'm sorry, guys. Excuse me. So you don't want to sit there, go with the break one way or the other, and then just go to Aruba and not put a stop in, right? So if it breaks, you want to make sure it's staying broke, if that makes any sense. Break and broke. SBU. Okay, it doesn't look like it's a real symbol, so I will have to come back. Exxon. Looks okay. Actually getting a little footing under it. Okay, WBA. Again, I don't like the fact that it broke the 50-day, but it's not horrendous. Got support at 81, and then the next support probably down here, well, 81 still. Then you got some support down here at 78. That's WBA. Celgene, nice bounce off the 200-day moving average so far, but again, I mean, this could be a topping pattern here. So wait and see for the time being. Gilead broke out of this pattern and came right back in. This is the ultimate sideways stock for the past few months, but it should be tipping its hand one way or the other. Okay, so don't give up on it yet. Keep it on your watch list. RSX, I love this pattern. Love this pattern. Doesn't mean it's going to work. Doesn't mean it's doubling from here. I just absolutely love this pattern because we're coiled up at the 200-day moving average. It ain't staying here. It will not stay here. It's either going to go up or down from here. And I know a lot of people want to hear, well, which way is it going? Guess what? This is more powerful than me giving an opinion on which way it's going to go, because at least we know this. You know, this is like a rubber band that you just twist. You know, eventually it's going one way or the other. Now, it may break before it goes, but it's definitely going. All right. Okay, let's see. More stocks to go over. EXC, got to get over that 200-day moving average, Richard. CNK, looks okay. But, see, like, you see this pattern? Like, I want to see it break out of this small base here. So let it clear 44, and then it should look okay. All right, ABBV, not bad. Watch the 20 EMA if it continues to pull back. I mean, I like this little burst of momentum here, so that's good. Intel, watch the 200-day. Watch the 200-day, but it looks like it's trying to get some footing under it. DIN for Steve. DIN. Yeah, wow. Wicked day on Thursday. and it's holding the 200-day for now. So, you got a topping-like pattern, right? Now, a lot of people, well, the right shoulder isn't equal to the left shoulder. Yes, I know, it isn't, right? It's not a perfect head and shoulders pattern, but it's what's known as being in the spirit of the pattern, right? You got a higher high followed by a lower high. That's the spirit of a head and shoulders, right? It's the same thing. It's showing that the interest is waning. So, I mean, if you do this, and you probably should do down to there instead of, oh, God, I got all these stupid Google alerts I get when people open my stuff. So you should probably do it to here, and yeah, you're basically just shy of your measured move here. So see if it gets a bounce here or not. UCO, did I look at UCO? No, I didn't look at UCO. Nice base here, Tracy. I mean, yeah, if it breaks, I guess you got to give it $10. What's the high? The high is $9.96. So what do you want to call it? $10? Let's call it $10. It's got to get above $10 and go. But wow, this is a nice looking base. Gotta wait for confirmation. And then you got hot Starwood Hotels. This is in a nice little pause here. It's a little sloppy, but it does have some upside momentum. Now, Mushroom says, Tiny, what is your opinion on iron condos on call spreads for the next 6 months where the market historically is not bullish? I mean, yeah, so you're talking about selling them, obviously. So you're talking about collecting premium here. So, I mean, what do you want to do it on? Give me, what do you want to do on the SPY or the SPX? Let's look at what you want to do it on, the SPY or the SPX. A lot of people are thinking that we can't go higher here, we can't do this, we can't do, and I understand. I understand that. I'm not poo-pooing the best worst 6 months trend. You can't. All right, you're a fool if you just poo-poo it. Okay, those stats do not lie. It's been a long time. It's been looked back at for a century or whatever it is, multiple decades. Might as well be a century, but I don't think it's that long. And there's definitely something to be said about that. But right now we haven't seen any real signs that the market is going to go into bear market mode. There are still some incomplete numbers hit. You got the 212.97 number on the SPY that hasn't been seen yet. I didn't even look at the NASDAQ composite. Now, the NASDAQ composite I did look at. I apologize. It fell a little shy of its all-time highs. The Qs aren't there. So, yeah, I mean, you could sit back and try to collect some premium here. I mean, what are you going to do? So let's look at the SPY, right? So let's do this together. So let's look at the SPY together. All right. I hate this stupid app thing. Here it is. Okay. Trading apps. Where are you? Option station analysis. All right. Anytime. Okay. So here's the SPY. Now, what do you want to do? You want to go out. You want to go all out. Well, I don't even have it. And I don't even know how to do this. I was looking at calls the other day like an idiot, and I never, if anybody knows how to spread this out, I would gladly do that. There's some spreads. If anybody knows how to make these nicer, please tell me, and I will absolutely be in love with you, because I do not know how to do it. Yeah. So that's the problem. Maybe Maybe number of contracts. I don't know. Yeah, see, I don't know. I can't get, I'll have to go to CBOE or something to look at it. So I've never traded options, believe it or not. I've had TradeStation since the day it opened, and I've never traded options on it, I don't think. I never opened an options account with them. Only futures. I don't think I traded stocks with them either. I just traded futures with them, so I don't even know how I would look. And I guess I could pull up... Anyway, so instead of just wasting all your time here, so that you got 211, right? So like, you know, what are you looking to sell? You're looking to sell, you're looking to think we're just going to stay in this kind of, you know, here you got these monthly Mays, right? I mean, everything's weekly now, but so I mean, I guess you could sell the 212.50s up here. You could get $1.25 probably for them. All right. You could probably sell the 209s if you think they're going to stay within this little range. I mean, this is tough. You know, my laptop is at my office, actually, that I do most of my option stuff on, so I can't even go through this stuff. But, yeah, I mean, you know, it's not a bad trade if you really believe that the market is either A, not going to go very far, or if you think a decline is coming. I don't know how you can make that opinion that the market is pulling back. I mean, what are you making it on? Just on the fact that we're in the seasonal time? I mean, it's not the worst thing in the world. At least you have something to grasp onto, right? It's not like, well, you know, there's no reason at all. No, the seasonal is not something to be ignored, but you know, I always talk about seasonal trends as being background indications. You still need you still need something to say, hey, you know, here's your trigger, here's your signal. You know, this is the sell signal. And right now we're not seeing that right now. So yeah, taking condors or butterflies or even just spreads, taking credit spreads here. I mean, if I was doing anything, I'd still be looking for put credit spreads here because I still think we're going higher. But you know, you got the 212.97 number up here. So if you look at like the 213s or 214s, as long as you protect yourself. But anyway, really wasn't much help with that. But I can look deeper into it, and I can see if maybe I can come up with a better thing to talk about, a better thing that'll make a little bit more sense. You know, the problem with confirmation, though, Mushroom, right? Yeah, I mean, it's always great for me to sit here and go, you got to wait for confirmation, got to wait for confirmation. The problem is once it confirms, the options will move so quick. You know, that's why taking like selling condors and selling butterflies and selling options overall, the point is that you're looking for us to stay within a boundary. So, you know, waiting for confirmation, I don't know if that's going to, right? Like, because in other words, if the SPY dumps from here, you know, when we go down, option volatility sticks around longer than when we go up. That's the way it works. Volatility swells on the downside and contracts as we're going higher. So you'll still have some premium in the calls. But obviously, if we go lower, most of the premium is going to get sucked out of the calls. You'll still have some because of the volatility, but you're not going to have nowhere near what you would have if, let's say you sold the the 211s here or the 212s here, and then it falls next week. Yeah, you're obviously going to do pretty well. Much better than waiting for it to fall and then selling the 212s, you know. So I don't know. Hope I didn't confuse you more. I just, you know, I get a little nervous when it comes to, when it comes to betting against this market, even though overall, if you look at it, I mean, this is what we've been doing the last several months, just doing this. Just one big mega consolidation. Like that. Anyway, that's it. Thanks, everybody. And I will talk to you all next week. I'm going to try to get this video out. Have a great week. Talk to you soon.